Welcome back. Now, Omnia's half-year profits have dipped 4% due to lower fertiliser prices, but the company also noted a surge in volumes as farmers purchased more of the commodity. Joining me to discuss the market dynamics at play that are dictating Omnia's financial fortunes is Group CEO Seelan Gobalsamy. Seelan, always a pleasure and a good afternoon to you.
Great. Good afternoon, and thanks for having me, Nolatanda.
Wonderful. Seelan, let's speak about this period in review. What I would say is a bit of a contrast between what we're seeing on the income statement as well as the gains on the balance sheet.
Yeah, so our half-year in review is characterized by a very challenging macroeconomic situation. We've had commodity prices fall quite substantially in the first quarter of the period, and that fall has continued from the second half of last year. And our business has agilely responded to that, and what you're seeing is a very resilient performance from our agriculture business, which has performed in line with our expectations. And then added to that, our mining business has performed incredibly well, where a few of the new growth initiatives has taken off. So yes, a very, very challenging environment, but another resilient performance by our business. Our income statement has obviously been affected by the lower commodity prices, so revenue is down, gross profit is down, and profits are down. But clearly what we've done is we've shored up our balance sheet further, strong net cash position, 1.6 billion, access to funding, and a well-managed working capital position. So a very strong balance sheet that allows us great optionality to expand and to grow further.
So let's just talk about Zimbabwe and the impact there on the financials and how you've chosen to report taking that into account.
So, what we've done is we've continued to invest. So, as we saw the change in our income statement, we've invested in Canada and Indonesia, and both those investments have delivered value for us, and that's enhanced our profits in our mining business. We also took some of our strong balance sheet position and invested in a green, cleaner technology business called Hypex Bio, and that's an explosives business based in Sweden. And this is something that our mining customers have been asking for. They've been asking for explosives that are better for the environment, explosives that are greener. So, that's how we've responded. Coming to the local market, where we've had to respond a little bit differently to some of the social political issues, the infrastructure challenges, and the energy challenges we faced. We've invested in solar. We've invested in water security, and we've also invested in additional rail tankers to shore up and fortress our supply chain and manufacturing plants. One of the best things we can point to is that we've been able to continue uninterrupted supply to our farmers and our mines in a very, very difficult environment.
So let's then talk about commodity prices, because of course both soft and hard commodities seeing a down cycle. I'm wondering from your perspective, when are you expecting, I would say, a normalization of these prices, especially looking at the fact that the macros globally still remain quite tight?
Yes, I mean, if we just, step back a few years, we saw immense supply chain disruption due to COVID that drove prices up. We then saw, the Russia-Ukraine matters that forced prices even further up. And, we've had 2 years of volatile high commodity prices. As the world opened up and some countries like China and others, allowed imports and exports and product and inputs started to move around, we continue to see disruption, but we saw the commodity prices come down, and they fell quite significantly. If we take a commodity like urea or ammonia, those prices went down, something like 20 to 30% in the last 6 months of last year, and then even more than that in this reporting period. So we are seeing a little bit of a normalization now. Prices have gone up as the planting season has started in the southern hemisphere. So a little bit of a normalization, but we certainly believe that we will still see volatility. We will still see movements that have been faster than what we've seen in prior periods. This drop, we last saw 15 years ago. And, at that point, our business made a loss. what you're seeing is an incredibly resilient performance, which is benefited by the agility of our supply chain and the strength of our balance sheet and the diversification of our business.
Let's also talk about, debt and gearing over this period. Of course, we are seeing this high interest rate environment. Seelan, how are you faring in that regard?
Yes, so a few years ago, 2019, our business had a large chunk of debt and was plagued by that. So we took a stance to, take some very strong medicine at that point. We did a rights issue, a 2 billion rand rights issue, and then we restructured our balance sheet and we systematically, sold off non-core assets, managed our working capital. So as we stand today, we're in a net cash position of 1.6 billion rand, and we have access to debt facilities of 4.5 billion. So we are debt free. We've got a substantial amount of cash that we've generated, and that puts us in a good space, to pay sustainable dividends going forward, but also to use that money wisely and in a disciplined way to expand and grow our business.
Let's talk about that expansion and growth, Seelan. Where are you looking? And, I'm also keen to find out about your thoughts on the Middle East, because I do believe there's also plans there, and the risk profile of that region.
Yeah, so let me start off by saying we are a 70-year-old South African company. So the banner behind and all of our results, collateral has got that, and we proudly, firstly, will continue to invest in South Africa and SADC. So we've set capital aside to help with the infrastructure challenges, to help with the logistics challenges, and to support our people and our businesses in SADC. The second part of our expansion plans is really our mining business globally. So we've done three things there. We've invested in a joint venture in Canada with a partner called Consbec, and we've invested in a joint venture in Indonesia. Both those ventures are profitable, we can proudly state that, and progressing very well. The third part of our expansion plans are in Australia. There we've got an agri-bio business and we've got an explosives business. So we've been investing in infrastructure and distribution in those businesses, and we'll continue to do that. I guess there are other opportunities. We announced one, which is Hypex Bio, a business in Sweden that we've bought 10% in, and we will continue to look for opportunities in our agri and mining businesses to expand. From a regional perspective, Nolatando, we haven't set the Middle East up as a targeted region for us. There's clearly value we can add there. We have got distribution businesses there where some of our agriculture products are going into that region. And we watch closely to see whether we can partner with partners in that region to expand at the appropriate time. We've been very, very disciplined with capital allocation. So, we won't just run off and do something too quickly without thinking it through.
Yeah, Seelan, before I let you go, Omnia has been very intelligent in the use of JVs, in territories where, you might not have a firm foundation. Let's just talk about that, and if that's still the model that you intend on using, as you expand, and then possibly just looking at the overall outlook for Omnia for the remainder of the reporting period.
Yes, so we have been, and you rightfully say, we have been successful in using partnerships and joint ventures. I think a proudly South African company with proud South African roots, to expand very far away in countries like Canada and Indonesia, need partners. We need local knowledge. We need folk that can help take our great propositions there. So we will continue to do that, and that's exactly what we've done in Sweden with Hypex Bio. But having said that, there are other opportunities where perhaps, we'd be able to buy an entire business or do it alone. In Australia, as an example, our agriculture business is wholly owned, and we do that by ourselves, and we are very, very successful in doing that. In terms of outlook, we see good agronomic conditions in agriculture at the moment. So, there's a lot of demand for fertilizer, and I think it's very important that farmers plant, that food security is maintained on the African continent and in South Africa. And we know that explosives is a primary input into mineral extraction and mining. And mining is a big driver of GDP growth across the world. So, from our perspective, what we're focusing on is ensuring supply security, ensuring that our customers have the inputs they need to farm, and to mine, and we'll continue to do that religiously. We have a great, strong balance sheet, and that allows us the flexibility to expand and to grow and to protect our business during tough times.
Well, Seelan, it's always a pleasure speaking to you. Thank you so much for taking us through this set of numbers. That was Omnia CEO Seelan Gobalsamy.